Good morning. Today is Thursday, November 7th. I'm Joe Terril, president of Terril and Company, independent wealth managers in St. Louis, Missouri, with about $840 million worth of discretionary funds under advisement. This is another update on our thoughts on the market, economy, inflation, interest rates, and all the things that end up being very important to us. Before we get into a discussion, let me introduce Bill Newbold here sitting to my left. Bill joined us the 1st of October. Bill is a 24-year veteran of JP Morgan, and I won't date you, Bill, with the age, but
Right.
almost 40-year veteran of the investment world. So we welcome you, Bill, and
Thank you, Joe.
Look forward here on the investment committee to your thoughts and insights. I thought what we'd do today is maybe just have a quick round table, little panel discussion about what we see happening now. Obviously, we're post-election 2 days, and the markets have had a sizable reaction. And our thoughts are always risk reward, but let's talk maybe a little bit first about the reward. I'm going to ask you, Russ, to give us some comments about what you think the rewards are here that are going to happen maybe between now and inauguration date, and we'll get everybody's comments, and then I want to talk about the risk. I'm always worried what can go wrong, what is the risk to maybe the agenda that the administration is going to set out. But I'm going to turn it over to you. Russ, just give our clients and the people that tune into us on a regular basis your thoughts.
Okay, thank you, Joe. And welcome, Bill. We love to have you.
Thanks.
I would say we do a nice job breaking down, like Joe said, the economy, interest rates, and the markets. In terms of rewards, Joe, the economy we continue to believe is strong, and I don't think that changes. I think the market's action yesterday further supports that the economy is going to continue to do well. That's one reward. On interest rates, I'm going to leave it to the two professionals, but I do think there could be some challenges ahead, right? Maybe bumps in the road with things like interest rates, deficits, and tariffs. As far as the markets, I think we may have gotten a lot of our reward yesterday, but one of the things the Terril team has been advocating is those 493 stocks. It was rewarding for us yesterday, Joe, to see some of those stocks have excellent days. I think that broadening out of the market will continue. We've had some nice gains for our clients in some of the stocks. We have a Warner Brothers today, which reported good subscriber numbers. We have Globus Medical, which hit a 52-week high. AT&T and Verizon have not only been great income-oriented investments, but have hit new highs for those two stocks. Toast has been a big winner for our clients. Coherent. So clients, while that risk-reward continues to be our focus, clients have been rewarded with some of the names we own.
Yeah, the 493 that you're talking about for viewers that don't know, we've talked about the S&P 500 and the fact that it's being dominated by 7 stocks. The 493 refers to everything other than those magnificent 7, as some people call it. But Bill, okay, you're on the hot spot here for the first time. Why don't you give some thoughts
Sure.
as to what you see going on here?
Okay. Well, thank you for having me here at Terril. Terril's been a longtime client of mine from JP Morgan, and so I was familiar with their process, and Russ and I were teammates at JP Morgan, and so we had a pretty good knowledge of Terril and Company, but it's nice to see the process even in more detail. And I think, Russ mentioned some things We've got the election out of the way, which I don't know that it really matters for the market, but as far as an investor sentiment issue, I think there's been a collective sigh of relief that it's over. Now we can focus on what the policies are going to be, and we saw some, maybe just a relief rally in the market yesterday. And I think, Joe brought up a good point about the other stocks outside of the Magnificent Seven. We did some work earlier this week where those names still screen very cheaply to not only the Magnificent Seven, but the overall S&P 500. So that's where we'll continue to see our best ideas come from. And I think probably through the year end, we've got a somewhat of a free pass. It's expected the Fed will cut rates later today. But really, there's no major speed bumps. We're watching the debt ceiling coming in December. But overall, we look like we're in pretty good shape through year end. And then, we can reassess for 2025.
Yeah, you're sort of stealing what we're going to talk about. The markets reacted very positively to the fact that corporate income taxes probably are not going to go up with the result of the election, and government regulations that are very costly probably are not going to go up, which would be positive for companies and stocks. However, interest rates surprisingly took a pretty good jump yesterday. They're basically unchanged this morning, but the real scenario that we have to watch is how are we going to pay for all this? Tariffs alone, in our opinion, aren't going to do it. The economy should stay strong. We've been saying that for 3 years. We continue to believe it today. The economy is going to do just fine. But investment markets, ultimately, if we get to the point where we're running a $2 trillion deficit, if the markets begin to think that we're going to now run a $3 trillion budget deficit to pay for all these programs that have been promised, then we're going to have trouble in the marketplace, and you want to be very cautious. But Dave, you haven't voiced up. Give people your thoughts.
Well, the market did have a great day yesterday on the results. Yeah, I think it priced in the tax cuts. Corporate America, it's thought they will have basically a 4% increase in their income just based on their tax cuts. That was priced in yesterday, along with regulatory relief, a more friendly FTC. So you may see a little more activity in the M&A space, which people are excited about. But saying that, as Joe mentioned, the 10-year Treasury, since Jay Powell cut 50 basis points, is up 0.75%. That's a significant move in a market that's traditionally very conservative. It moves in just basis points, not 0.75 point. So that's what I'm watching. And the market also has taken out a 1% cut in the forecast for the Fed funds rate out in the future based upon the election. So Joe's thesis on rates higher for longer seems to be coming to pass.
Yes. There's no guarantee that inflation is over with. And there are some countries around the world that previously cut interest rates that are now back to raising interest rates because inflation came right back. We'll see if there's any chance that could accidentally happen in the United States. But part of that will be the Federal Reserve meeting, as Bill mentioned, is today. And we expect, as everybody else does, they'll cut rates slightly, but would be more interesting to see what they have to say about what their future plans are. So, anyone have any closing comments or anything specific they want to mention? If not, we'll call it right here. And we'll be back in 2 to 3 weeks with an update on thoughts about the economy, inflation, interest rates, and investment markets. Thank you for joining us today.